Hello and welcome to Macro Mondays, brought to you by David Gockstein. I'm your host, Landy, and today is Memorial Day, a day of remembrance. So I hope that many of you do, pay respects to the fallen. And today is May 25th, 2026. We're looking at Bitcoin here to start on the daily. We will take a look at the weekly. I think there is something pretty interesting happening on the weekly, but we would need to see confirmation on the daily that would follow through to the weekly closes. But we'll define some of the criteria that I'm looking for either continuation to the downside or a recovery back to the upside, in particular above that 78.4 to 80,500 to 700 area. We'll take a look at oil as we did hit some of our targets to the downside. And we'll take a look just very quickly at futures for traditional markets. One of the big things is it's a 3-day weekend in the U.S. So, we need to see volume during regular market hours. And, of course, that's what we're going to prep for in this video today. Now, looking at Bitcoin on the daily, we did get that run down into the $74,000 area that I talked about on Friday. We broke below the $76,000 area in the Friday session and into close. And then, shortly after I recorded that video and uploaded it, I was talking about 74,000 to the downside, and we essentially got a strike right into this 74.1, this daily swing high over here. And this is all stuff that I talked about from this structure over here. If we do lose 74,000, can Bitcoin swing into the mid to low $73,000 area? Yes, but you'd want to see it closing back above around that 74 to 74.1. And, on Saturday, we did see that in terms of a move down towards 74,000, in this case, 74,200. So $100 or $97 above that 74.1 line there. And we got a nice move back up into the Monday session, but we have not seen a close above that swing high from the Saturday candle. And, so we don't see a closing low, but this is a nice swing low set in lower term timeframes. And realistically, you'd probably want to see it closing above around 77,550. If that were the case, the closing low would be in, we'd probably either already be testing around that 78, 78.4, or would likely test it and into this zone shortly thereafter. And then on the other side of that, if we see a breakdown below 76K, full zone is fair game. Right down to what I just talked about, 73.5 to low $73,000 is fair game. Below 74, you would want to see, if you're bullish, you want to see closes back above 74, 74.1. Pretty straightforward stuff. And what I would say is keep an eye on risk appetite. There's a lot of, and I've mentioned this over and over and over again, there's going to be a lot of fog of war stuff. And I've mentioned this since day one of the conflict kicking up in the Middle East, that there's fog of war on all sides. And the market will tell you what direction things want to go. And if we do see fast moves, just know that the real move typically isn't on the initial fast move. It develops over time. So in this case, we would want to see, we got a fast move down into supports after losing the 78,400 level, the $78,000 area. It's also where the basis band is coming in, the 20 simple on the daily. Anywhere above there, looking right back to the 80,500 to 700 by the upper first. Anywhere above there, looking for the highs to get ran. $80,000 to that $82,500, $83,000 high over here. Right around the monthly close open higher low structure. That same higher low structure that put in the low, which was a higher low at the time at 74,420.69 specifically on spot, which is right in the zone that Bitcoin has now tagged and then gotten bought off of. So, that same candle structure, that higher low structure, which was the last higher low on a monthly time frame for the bull structure on the monthly and the bull market on the monthly, is an important area. that if we trade above, 82.5 to 83, we're very highly likely going to go test 85 to 86K up here, which is a big weekly zone. And that would open up the top side of that weekly zone between 89 and 90. And there'd be even more on the cards, to be quite honest. I would even look up as far as to that 93.5, which is another weekly to $96,000, big weekly zone up there. And vice versa to the downside. Obviously, if we do see closes below 74, I think that it's safe to say, if it doesn't get bought back up, but we see closes below, very highly likely going to see this area tagged pretty shortly thereafter on expansion between 72.2 and 70,000 to 70,500. And that, as I mentioned over and over again, I know you're getting sick of me saying it, but that's where the rubber meets the road for Bitcoin bulls in this case, because below there is kind of the breaker right here. And this was the trend change off the $65,000 low, which was a weekly higher low. And of course, right around the prior cycle all-time high. In fact, that area, very important, 65 to 69K, whereas the two highs that were put in 2021, 65K first before run to 28 and then back up to 69, acting as pretty important areas if we did see a move back below that 70,000, 70,500, this big weekly area, or big daily area, I should say, rather. And that's, of course, of the tighter range here off of the initial bounce off of 60K. We saw the lower high and then some higher low or consolidation structure before a trend change to make those deviations that Bitcoin finds itself testing right now. Anywhere below there, that's where we start to get, anywhere below 68 to 69 or so, we start to get a clear view that 62.5 to 65 here is back in play, and potentially even the lows again at 58 to 60 in the mid 50s. From there on any kind of closes below 58, we likely either already saw mid 50s or will see mid 50s, because that would probably be, especially if we got like a really big rundown, that'd be probably a liquidation cascade into the mid 50s, potentially even opening up like, prior cycle lower high at 48 to 50K and more. That would be especially on higher term time frame closes. But for right now, Bitcoin is still in a good position to still test its most recent highs around the monthly. So that 82.5 to $83,000. We're seeing a compression on the weekly. I think that I spelled it out on Friday pretty clearly what I'm looking at this as. This is a bearish retest, and it was a big expansion. We're going to go into a compression here. We can see a wide variation of pricing within structure as we enter a compression into likely a consolidation period before the next major expansion. But, you can see 88 to, almost $89,000. What is that? That's the lower high over here, the higher low over here, right where the upper second standard deviation is. You can even see up to the $95,000 to $96,000, which, yes, would be, pretty clear that big invalidation for further downside is in clear sight there, but not the right setup in my opinion at $98,000. But that would have to be expansion, then close over close continuation back to the upside and start recovering very quickly above the highs over here, which would encompass these lows around the 107 to 110 area. That would change a lot, but really right now, this has all just been a bearish retest. Still keeps the downside completely open for the bears in terms of structure. Now, what I do find interesting is this was a nice buyback off of the basis band. So bulls really don't want to see, if you want to see those higher prices to test higher before maybe a wider correction, you want to see, $74,000 to $74,000 hold up on any kind of rundowns, or you'd want to see it just come straight back down into the actual low and give a test of it without breaking it and closing below it. If we do start to see closes below 65, then very highly likely we're going to be running those lows. Not necessarily looking for that to be like the big move down, but we'd have to see how things react on any kind of closes on the weekly below 65 if that were going to be the case. because that is the last higher low. And then that opens up the bottom side, 58 to 60, right around that lower second. Closes below their price replace band down into the mid 50s to low 50s. And interestingly enough, lower third is right in that area where I have some major weekly levels. And I did want to point this out because one of the big things down here is you use this current week, right? If we were to just see like some sort of hellacious dump off, oh my God, Michael Saylor sold his Bitcoin or something crazy. Well, one, it would probably shoot right through that if that was him. But if we were to see some sort of really crazy hellacious sell-off, typically what you see is you use the lower third as the marker for the next big weekly, and that's right at a major weekly between 52.5 and this basically 56 or so. It's 55.8, you can call it 56, and then right in between there is 54 to 55K essentially. It's 53.5 to 55 in there, so top side of this weekly area essentially it's 55 to 56 down to 53.5 to 52.5. You can just call it 52.5 to 56 is a bigger weekly zone. And if that were to resolve on any kind of closes below 58 to 60, that's where we could encompass 48 to 50 down there, major area, potentially even more down into the mid to low 40s, 42.3. We could, if this was going to be something that happens, we'd refine this. There's some areas around 44 to 45, and then of course 38.5 down there is a big monthly. That's not my first read on this right from here. I do think that because of what we're seeing, I just want to call it the confluence, kind of how you use the bands, price replace band typically from the prior week. So 96K would be an important one if we saw like a nice rip to the upside. In the current week, if it didn't hit there and we were starting to trade above like 89 to 90, I'd be looking at that in the next week's candle. But big thing right now is this is big expansion into a bit of a range compression. And then we await, and we can bounce at the extremes, like upper third, lower third are extremes. You could see areas of the bands get hit to the upside, downside, but it's about the next compression to expansion. That would be, close over close price, close over close, prices above the upper second here at like, 89 essentially, and close over close weeklies here, and then momentum below that, 60K essentially. So now it's just a waiting game. So how does this, the high is in on the weekly. So do we get a higher low locally? Well, if we start to drop, 74 essentially, and last week's low, get below the basis, not looking likely that we put in another higher low. If we do see a close above 78,123 here, or 78.2 or something like that, that would be another higher low, but very close to the last lower high. So you'd want to see immediate continuation above, 82.5 to 83K in order to start testing, the 85 to 86, 89 to 90 by this upper second. And then maybe try for a break of 98, which would be the wider trend down. So I think it's an interesting setup. I think that no matter what, Bitcoin can remain volatile within the bands for right now. And realistically, we await an expansion phase. And I don't think we're looking at that. I think we're looking at this going into a compressive range for a little bit. But if I am wrong on that particular outlook on things, then we'll know getting close over close prices above or below the lower second or upper second standard deviation, and starting to push into a price replace band around the upper third or lower third. So we're gearing up. Next big move is on deck. It just might take a little while to start to present itself that way. Now, let's go ahead and take a look at oil, because oil futures has been trading. We got a nice move below the $90 area. It's realistically, what is it, like $90.71. We got a nice move below it. I mentioned somewhere around the 88 to 90, we could see a swing. You want to see breaks and closes below the actual 90, what is this, $90.71 for WTI. Get continuation down to that lower third, break that 88.63 and start going for, 84 to 86 down here by the swing, and then eventually break below it to actually get below that 84 to 86 area, which is this close and swing, and start pushing down into the the next big area, which would be mid to upper 70s. 76 to essentially 80 being a wider zone for the swing and the open here. And below there, that's when things get interesting. That's when we start looking 68 to 72 down at the major supports down here. 68 to 72 is something that I'd be looking for like a gap fill. But I'd want to see it on consistent expansion on daily closes. Below the lower second, that can break below that 88.66 there. That would look pretty good to continue to test down to the mid 80s, and then maybe even eventually upper 70s, low 80s. To the other side of that, if we continue to see closes hold up strong around the $90 region, watch 95. Right, closes back above could easily slingshot things right back up to that 98 to 102.5 zone daily area, and then anywhere above there is right back to the top side for 105 to 107, right? And in this case, it's looking like it wants to get expansion, but we need to see the additional criteria of closing below the zone and continuing below the swing low. Closes below around that $90 region, likely beget tests below that 88. And then it's all about closes for continuation on expansion down to the mid 80s, 84 to 86, and then down to that actual, that area on the close right here, at, what is this, like 84 directly. So kind of happy medium being that breaker right around that 84.37 on the swing. That's what you'd want to see if you want to see continued risk on. We see the same area for Brent. Like it's the zone is a little bit different, but it's essentially below 92 to 96 or so. 90. I'd want to see this continue down below 92, start testing the swings at 90, and then down here at that next swing at 86. If that were the case, Brent has a premium over WTI. So WTI would be hitting some of the low 80 regions. If we did see that back above 100, we're likely seeing WTI at or above 95. So keep a close eye on it. I'm going to reiterate that, the fog of war is real. And I would also understand that if we do see oil prices spike aggressively out of these areas, it wouldn't be out of the ordinary. And if there is any kinetic conflict, which I think there is, like some kind of strikes going on, understand that it's about supply disruption. So if there's any Gulf supply that is destroyed, that would be sticky higher prices. But any kind of fast moves up, more speculative than not, if there is there's no issue on the supply side. All right, traditional markets. Let's go ahead to take a look at futures for Dow. Nice move up, nice new all-time high on expansion. We were looking at the expansion here, nice new all-time high. This is telling us that, we saw the risk rotation within markets and then risk on again. And this is kind of mirroring that, right? We had the futures slightly higher high here, and then we just pushed higher in the beginning of the Tuesday futures session. So, continuation would be, essentially futures hit the 51 target. I'd be looking 51.2 to 51.5 and potentially even 52 on aggressive expansion. When looking at futures here, we're looking for 30,500 by the upper second, which would translate to, I would watch it very carefully, translate to around probably 30,250. But we got to see the high break. And at minimum, the lower term time frame was just rejected on Friday to really go test 30,000, and then 30,200 to 500 would be the next bigger area. When looking at SPY, I've been talking about 5 points at a time for SPY in particular. We see that futures traded up and did make a new high at the 756, 7569, so 7,569.75 so far. SPY above 750, I'd be looking 755 by the upper second, and then from there 760 to 765 by the upper third price replace band. Downside, just be aware, 731's the area that not much has changed, right, since Friday, because there's no session open. 725 to 730 would be the gap fill. Anywhere below there, we're testing around 715. If we're testing around 715, be aware that things could come all the way down to 710 by the lower second and potentially start encompassing around 700 to 705 down there. And that's going to be really indicative of the risk environment. Now, I know that the market keeps plowing ahead despite, the higher prices, and then gets a little bit more aggressive. What's happening is that when higher prices are seen in oil, is we are seeing lower term time frame pullbacks in traditional markets. But remember what I've been talking about the entire time since this conflict began. The squeeze and demand destruction is in the UK and Europe, European nations, and Asia primarily. And when we start seeing that, and we've seen this throughout, right? And I've even mentioned on the big rundown is like, beware of a V recovery. And that's exactly what we got, is because you get capital flight to what? The most liquid markets in the world, which is US markets. So just keep a close eye on it. Yes, I know Kospi's been doing well, and a lot of people making a big deal about like Hang Seng and the big sell-off. But realistically, it was in an uptrend off the lows, just not as parabolic as the US. Is it in danger? It kind of is, if it drops below like 25K. For like Kospi, it's just up and away. Holy crap. What a ride, man. What a ride. Got little consolidation, swing of the lows, close inside of the, close well above the actual swing low over here, and then up and away. After a little correction, retest of that lower high or shorter term uptrending structure, downtrend, back into the lows, don't break the swing, and then come back up, step back, and then boom. What a ride, man. That's freaking gnarly, man. But yeah, and for those that are you're trying to see where the money's going, it's really, you got to look at Forex markets, you got to look at the bond markets to see the flows of where things are kind of going. But I would just pay very close attention to oil. It makes economies, all right? When it's more expensive, it makes it tougher for economies to grow. When you see that it's tougher in certain regions, that money is going to go where it can have the most opportunity to make more money. And in this case, it's been U.S. markets, it's been Korean markets, it's been everything except cryptocurrencies, it seems. Now, I did say that on Monday I would check up on commodities, and that's gold and silver. So consolidation on the daily. Nothing doing. This is a downtrend into major support areas. We've already hit some of our major targets, right down at 4450, 4500. Now it's about, do we see the trend reverse? And as it stands from right here, we'd have to see closes on the daily above 47.75 in this case. Get that expansion back up to the 48, 48.95, 49 region. great. Otherwise, it's down to 44 and potentially more, down into the low 4K region. In particular, you'd be looking for gold. If it does come down to 42.75, you'd want to see it hold up if you're bullish. If you're bearish, you want to see that break down towards 4K. Above 4,900, it's looking good to boom towards 5K and potentially even 5,500 over time. Silver, a little bit of a different look, right? Had uptrending structure to a trend break and then right back into boom back to $90. Talked about this at the time. I was looking for a move to around 90. This was a while ago at this point. I said something along the lines of, as long as we hold 70, I was on a space. I think I was talking with some folks on one of the Wolf Bitcoin spaces, maybe. That above, like 83, we're looking like 85 to 86, need to see that to go to 90. We hit 90. And if we don't get a break at 90, we're probably going to head back down. That's exactly what we've seen. 74 to $75 an ounce has been kind of the main inflection point on some lower term time frames in the area, both to the bullish and bearish side. But the big thing to watch for is below 70. Below 70 is where things get interesting, down into the upper 60s for potential expansion down into, the mid to low 60 area, and then maybe start roping in that 61 to $60 swing low. But back above 90, it's 95, 96 very easily, probably very quickly, even thereafter getting to like $100 an ounce. Not too much more to say on that. A lot has been talked about with copper. Copper, we did get the swing and then move right back down to, like 620 or so, a little bit under 620 to 615. And haven't looked at it in a while. This chart has not changed at all since the last time that we've talked about it here. And, it trended all the way back down to the mid to low $5 region at 522 to 532 being the big zone that I was looking for off of the consolidation over here. And the big structural change that we saw coming off the low, and the structural changes on higher term timeframes than the daily here. But, big swing up, big move down, big move back to the highs. And now it's about, do we see potential further moves above 675? That would look pretty good and be a new all-time high, potentially roping in $7. But it's all about, 6 to 620. That's got to hold up now for copper. Otherwise it's, mid, it's mid $5 and under again. Yeah, that's pretty much it. Not too much else to say except, local trend does matter for Bitcoin. You're looking for, if you're bullish on some higher prices, you're looking for, a move back above, 78, and starting to test into that weekly zone, right? So we're looking at me not hitting any of the right buttons here, but looking for the daily here, you're looking for a trend break above, 78, 123 in this case, getting into that zone around that 78.4 to 80,500 to 700 and start working back towards the high. But, if we get a trend break, still need to see higher low structure as it relates to the last one at 74, right? That's pretty much it, right? Defining criteria, pretty easy right here. And then kind of take it from there, right? If we see, a little move down that doesn't break below 74 and puts in a higher low, great. All the better for a potential move back up, right? So if we saw something like this, then does like that, you'd have your trend reversal set up to trend break, and then you'd look for potential trend to continue back to the highs, as long as it could get over some of the resistances. If we see something like this, where we see a lower low to a higher high, what am I looking for? If we see, this break up, you still need to see it come back down and then do something like that, right? Or at minimum, just hold the last lower low and try to put in a higher low. So whatever comes first doesn't really matter. Criteria is very clear. Above 74, good. Below it, not as good. We wait for a setup on the long side to present itself. If we see a close above 78, 123, then we'll wait for the higher low as the setup to position if we want to get long again. Other than that, that's all I got for you this Memorial Day, this Macro Monday. I appreciate everyone who likes and shares this content out there. It really does help. I really do appreciate you. Drop some other tickers down in the comments if you'd like. And look, I'm looking for larger caps, maybe even some traditional market stuff you want some clarity on. There's not much for me to do in the crypto markets outside of like there's some different stuff. There's some things that are doing different things, right? Like you have Hyperliquid's been running against the market, making new all-time highs. You've got some other tokens that are doing the same. I think Venice and a couple of others, right? They're outliers. But what you want to, what I'd like to see is stuff that you'd want clarification on, or maybe a little bit of an explanation on that maybe I haven't looked at in a while, or that is high impact on the crypto markets or maybe even traditional markets. So if you do have some suggestions, go ahead and put them in the comments down below. Like and share this video out there. Again, I really do appreciate it. And then, yeah, I'll catch up with you again on the Wednesday check-in. And I hope you all had a wonderful weekend. I hope you had a good Memorial Day, remembering those that gave their lives in war. And I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.